Assalamualaikum, everyone. We are looking earlier at the Tawaruq deposit because we want to answer the question to what extent there will be a run on the Islamic bank. For sure that there is no such run on the Islamic bank similar to the case in the USA. That was besieging Silicon Valley Bank and the rest, but there can be some form of withdrawal risk in Islamic banking in view of the similarity of the deposit product. So in a sense that the Tawaruq deposit looks very much like the riba deposit, which I will try to show today in this video. So meaning that if there is sudden withdrawals of funds or deposit fund, that is a possibility for Islamic bank because the nature of the Tawaruq deposits are very, very similar to the conventional deposits, and for that reason I would suggest that the deposit fund, the Islamic deposit, should be diluted or should not be totally depending on leveraging. And that means the investment account system should be promoted and enhanced because this will become some sort of an automatic stabilizer to prevent sudden withdrawals of Tawaruq deposits that may endanger their liquidity and solvency. Okay, let us go through this note, and these are very important observation here, and I would like you all to be very careful, to be attentive what Islamic deposit constitute, because in general, once the funding is labeled as deposit, they are considered as a loan that the bank secured from the depositors. So deposits are leverage or borrowed funds that banks secured from the individuals, companies, and government agencies. These deposits are used by the bank to make loans, and bank do not use capital fund to make loan because these are expensive funds. ROE of capital fund can be double digit, 10%, 15%, but the deposit that the bank secured from the public are very cheap source of funding. So the deposit fund are used by the bank to make loan, and bank do not use capital fund to make loan. However, using deposit fund to make loan can invite moral hazard when bank can become irresponsible in making loans to, say, connected party, because there is low skin in the game. The funds the bank uses to make loans are not coming from their pocket. It is coming from our pocket. So any loss to the loan will jeopardize the depositor's money, and it may affect capital, but capital constitute a very small component of total deposit. So this moral hazard required to be removed or controlled. Thus, prudential regulation serve to remove this moral hazard by making sure that banks make good loans and have adequate capital to absorb unexpected loss from loan default when it occurs. Right? So because bank uses public funds to make loans and not their own funds, and and this would invite irresponsible behavior, and the central bank will come in to regulate to make sure that bank make good loans, to prevent this loan from becoming from turning into default. So bank must make sure that they have a proper risk management process to ensure that they make only good loans, and then having enough capital to support this loan in case this loan turn into default later on. And this is what we have right now to ensure that the bank have enough capital to absorb what we call unexpected losses from loan default when it occurs. And then again, I can repeat, a deposit is a loan banks acquire from the public in return for full repayment of the loan plus interest, over a specified tenure. So once your funding product is defined as a deposit, then it is a loan, as spelled out by the Basel Committee of Banking Supervision, that once the source of funding is declared as deposit, then it is a loan that the bank secured from the public. And deposits are cheap loan that banks secure from the working class at low interest rate. So, current account pays 0%, saving account pay 1%, and so bank also take loan from the rich depositor, such as what we saw in the Silicon Valley Bank. So both group, the working class and the rich group, put money in the bank as a loan to the bank, which the bank must be able to redeem on call, right? So a deposit account that has no fixed deposit period provides instant access to fund and allows unlimited withdrawal is known as a call deposit. So most of this deposit that we see, in SVB case, these are call deposit where the depositor, can withdraw on call, and the bank will have to, honor the withdrawal, the failure of which will cause panic and eventually a run on the bank. So while bank can make higher spread in loan by using deposit compared with the money market, they are highly exposed to withdrawal risk. So meaning that if the bank can secure fund from the deposit market, then the bank can make more profit because the deposit fund are low cost deposit, and the bank can enjoy a higher spread. So if the bank pays 2% on the deposit and charges 10% on the loan, so the bank can make a spread of 8%, which is very good. But then the downside will be the bank will be exposed to withdrawal risk. That's what we saw in the Silicon Valley Bank case. However, if the bank is to use the money market funds to make loan, so maybe the money market funds are acquired at 5% per annum, and the bank make a loan of 10%. So the spread on this loan will be much lower, but then the upside will be, the withdrawal risk will be, will not be as acute as what we see in the case where funding are secured from deposit. So the question now here is, how are Islamic deposit? How are the Islamic bank deposit, vulnerable to withdrawal risk? Are the Islamic deposit vulnerable to withdrawal risk, and that's causing a run on the bank? So this is one of the issues that we would like to look into. Of course, if we look back in 1997, in the Asian financial crisis, there was withdrawal risk, or there was like a cash outflow affecting Islamic Bank when the return on conventional deposits are much higher than the return on Islamic deposit. So there's a deposit outflow from Islamic deposit into conventional deposit because the Islamic Bank were not able to give competitive rate relative to what was given to conventional deposit. So there is some form of withdrawal risk in Islamic banking that were documented well in the Asian financial crisis. Okay, we can look into this matter later on. We can stop here right now. Inshallah, I will see you again. Thank you very much. Please don't forget to comment and to subscribe. Assalamualaikum warahmatullahi.